Hello folks, this is Naeem Aslam, Chief Markets Analyst at AvaTrade, and welcome to our daily fundamental video. In today's price action, as discussed yesterday, all the three major US indices, the Dow, the S&P, and of course the Nasdaq, they closed in positive territory. Remember, we talked about this particular element when the Dow was down well over 900 points yesterday and it recovered over 400 points. And then it was a pretty much move to the upside. But what really triggered that upward momentum for the coronavirus stock market rally? Well, the two major factors are, first, the Fed came and reminded the market that the rally is pretty much supported by the Fed. And no matter what happened, the Fed is there to support the market. So yesterday's a detailed plan for the Fed in relation to their corporate bond purchase program, which by the way is the first time that the Fed is doing, but not the first time that the Fed mentioned about this. It was already announced, but it supported the sentiment because the market started to drop at the moment that the Fed said that, okay, we are ready to buy those corporate bonds today. The sentiment changed enormously in the market, and the market was ready to go to the back to the upside. The second factor which really supported the markets was $1 trillion worth of infrastructure proposal by Trump administration. Again, it is not something which just came out of a blue and the market just learned it for the first time. It was pretty much known to the market that this is going to happen, but the news when it came out that the Trump administration is preparing this stimulus package, which is worth over $1 trillion, I think that really bolstered the equity sentiment among traders, and that they started to buy that. And now in the European markets, what we are facing today, or what we are really seeing, is a fear of missing out, also known as FOMO. So that all that money which was parked on the sidelines is ready to get involved into the market, because traders do not want to wait for the markets to revisit the COVID-19 crash, that low which was formed during the COVID-19, and that may or may never happen. But right now, I think given the fact that the market where it bounced of those special technical levels, and again, if you wanted to watch those technical levels, do go and watch our technical video on that I did yesterday. The fact is that the market has bounced from those levels. This is really bolstering the bullish momentum. Now, as you can see in the chart, the Dow Jones momentum still looks very strong today, and it is highly likely for the Dow to dig itself out of this hole which was formed because of the fear of second coronavirus wave. Now, those fears, they are still very much genuine to an extent when it comes to China, because there is another breakout of that, and then certain areas of Beijing, they are heavily clustered with this one, and there's a still threat of lockdown taking place over there. But guys, this is the reality. This is what we are going to live between now and until the end of this year, or at least until we get a vaccine. The lockdown on a smaller areas is going to take place, and this trend is going to continue. Of course, the market will be very much jittered by this particular news, but do not expect an enormously or overwhelming abysmal price action. I do not expect that, at least. Now, in terms of commodities, we are seeing some bids coming back when it comes to oil prices, because remember, yesterday we've seen a massive drop. The prices are still down well over 10 to 12% for both crude and Brent respectively from the recent highs, but now the recovery has started. But again, I'm not too optimistic. I think consolidation is the way forward. There are chances for the prices to recover back to its previous highs, but there are more chances for the prices to consolidate or to continue the move to the downside. That's all for today. See you guys tomorrow.